When I bought my very first property, I didn't make any money on it at all. I actually made a loss, a really massive loss. And the property itself, this is a crazy story, but the tenants that were living in the property at the time were drug dealers.
Hi guys, thank you for joining us on today's episode with Bruce Guan on the Property Blueprint podcast. Bruce is a great friend of mine, but also very successful in his own right in investing in property, but also he runs a very successful business. He's going to share some great tips and ideas with you today. And guys, make sure you stick it out to the end because we've got a brain buster and we're going to ask Bruce, what would he do if he had $10 million? And he's a very successful investor. Stay tuned.
I'm here with a friend of mine for a very long time, Bruce Guan. Thank you for being on today, Bruce.
Thank you for having me.
Yeah. So Bruce, for all of our guests and viewers out there and listeners, Bruce has been a friend of mine through the journey. And it's funny when you talk about friends through the journey. My journey has been all about business in the last 8 years. I don't know much else, and kind of had a child along the way, got married, but the whole last decade of my life has been captured by running a business and getting into property, understanding property, and part of that journey, you meet a lot of people, right, Bruce?
Yes.
One of those persons in my journey has been Bruce at an early stage. It's sort of the same time because my first time into a BNI, I believe I met Bruce, and I think that was probably the second week of my business ever. I was a quantity surveyor, and Bruce was I
was a property investment strategist.
There you go.
Yes.
And so that's where it all started for the relationship between I and you. From there, so I'd like to, I guess today, share that journey because Bruce has a very amazing story to share. It stemmed from, he's not always been in the same org. He was with a firm previously, and then learned a lot about property. But before that, let's take it all the way back, Bruce.
How far you want to go back?
Where is it safe to start from? It could be a while.
Yeah.
What about the days you had hair? No, we won't go there.
If you want to.
Yeah. Well, let's get into it. Where did you?
I'm an open book, man.
Okay. I like it. I think the viewers will appreciate that.
Sure.
So where did it all start for you from your younger years? Why where you are now? Why?
Why am I where am I at today? Okay. Look, I guess the best way I can summarize it is that when my parents came to Australia, they didn't really have much, right? And so I remember one of my stories my dad told me and like blew me away. It literally came to Australia a couple of days in and no money whatsoever because spent all the money he had just to get us here and came here with nothing and opened up a bank account, went to the ATM, and you know how sometimes when you open up a bank account, the bank gives you like free credit just as a promotional thing. Awesome. That free credit that he got, which was like 10 or 20 bucks at the time,
takes me back.
Was his entire life savings at the time.
Yeah.
So that's kind of like how we got here to Australia. I grew up in the suburbs of Cabramatta. As I was growing up, I had always seen that how my parents, like how they lived their lives, and they worked really hard for that. Working, trying to run their businesses, and buying a property to live in at the time, right?
What kind of businesses, if you don't mind me?
So my dad was in the restaurant business.
Okay.
And so he's been running restaurants his entire lives. They're still running restaurants today. And I witnessed that hard work in my entire life. And so that DNA was always in me, just kind of like the hustle mentality, hardworking nature, and just trying to get shit done, right? Like no matter what, just get stuff done. That's always been in me, but the business side of me didn't unlock until probably around 2010, because when I graduated I didn't go to university, so I flunked my HSC.
So
really
just
badly.
for the viewers out there, 2010 when you had this pivotal moment, changing your life.
Yeah.
What age were you? Just for the viewers out there.
Oh, because you bring me back now, 30 years old. So I'm 40 today.
Yeah,
that was 10 years ago.
Well, there you go.
Yeah.
Yep.
So between the ages of 20 to 30, I was pretty much working in the corporate not in corporate, but I was a graphic designer, right? So I come from a creative background. So I was graphic. I'm professionally trained as a graphic designer, and I was working in that industry for like 8 years, climbing the ranks. Got to a point where I was managing a team of designers in a design agency. It was around 2010 where I realized I went to a property seminar. So that's the thing that unlocked everything for me, a property seminar, if you can believe that.
And why a property seminar at the age of 30? What
triggered it?
What triggered that? Wealth creation, right? Is what you want. You go to a property seminar for. I take it.
So that was around the time where I decided I wanted to expand my property portfolio, and I wanted to invest more because I wanted to, like everyone, right? You start off with the idea that you want to secure your future, invest in more property, and take it a little bit more seriously. At that point in time, I had already bought my own property. I had bought a little apartment for me to live in. I'd moved out of that apartment. I had rented it out. I thought to myself, now's probably the time I want to be able to take this a little bit more seriously, right?
Did you see some increase in equity?
Yeah.
When you moved out and renting
Yes,
it and
I
sort
did.
of had that investment strategy?
Yeah.
So is that an important part in the investment journey for someone when they realize that the potential of a property, when it's actually renting, you're getting money for it, and in return you're also building equity at the same time? That's also, you could draw on it and things like that? Or?
So there were a few light bulb moments that I had in my life when it came to property itself. When I bought my very first property, I didn't make any money on it at all. I actually made a loss, a really massive loss. It was in 2004. And so this is like my very first experience. I bought it in 2004 for like $280,000. It was like a 5-bedroom house in Sydney. And I sold it in 2007, 3 years later, and I made a loss. I sold it for $20,000 less than what I had paid for. And the property itself, you probably this is a crazy story, but the tenants that were living in the property at the time were drug dealers. They were literally cooking heroin in the kitchen of my property. They had the whole setup there.
Tell me you had insurance.
I didn't.
Bruce.
No.
Okay. All right.
I didn't have landlord insurance. I had none of that because I didn't know anything about property at the time. I panicked. I got emotional, and I sold the property. That property sold in 2021 for $987,000 in 2021. And that was a massive lesson for me because that experience put me off investing for a very long time. Not until 2010 where I had the courage to do it again and give investing a go again. And the reason I went to the property seminar was because I knew that I couldn't do it on my own. I needed to seek professionals for help. That's why I went to the property seminar. Because the second time I wanted to try and give investing a go again, I didn't want to repeat the same mistake that I made the first time I tried to do it. And so I thought to myself, look, I probably should give this thing a go again. And I went to a property seminar. After going to the property seminar, my life completely changed around because it completely opened up my eyes and my mind about the possibilities, and it unlocked the business DNA inside me as well. And I decided to literally go into property full time as well at that point in time.
Did you ever help your parents out with the business?
No.
No. Okay.
My parents were really good. They kept me at arm's length from the business.
Focus on education.
Yeah, 100%. So my dad never allowed me to go into the business to do anything. Never allowed it because he didn't want me to get caught up into it and then think to myself that was my future.
But seeing them endure that, running the business and the long hours and the work ethic required to even have a business that's at some degree successful. That's
right.
You can almost grasp that concept, and then I think naturally you gravitate towards that. Is that what you could say for?
It's quite ironic because I'm the type of person where once I'm set on something, I'm fully into it. But if I'm not set on something, I'm completely a million miles away from it. So that was me. For the first 10 years of my life, I was a million miles away from business. I thought to myself, I would never run a business. I'm not the type of person to run a business. The thought never even entered into my head. And the times it did, I was like, nah, it's not me.
Is it the stress that says that? Or
no, not the stress. Yeah. Just because nothing triggered the idea.
Yeah.
Right? I had no intentions. I had absolutely no even a desire to run a business. I was happy. I was happy with my career, with the people I was working with. Even like my pay, it wasn't like I was getting paid the most in the world, but I was like, yeah, I'm satisfied, right? I'm comfortable. Pretty much, I was in my comfort zone. And then when I went to this workshop, I realized that there was so much more I could achieve. It just unlocked something inside me. I realized that it's like going to a Tony Robbins seminar, but it wasn't as like high energy. It was just some guy talking about his life story and property, and talked about how all the things he could achieve. And the guy that was speaking, he had run a really successful property business as well. And I thought to myself, I could do that. Like, that's something I could probably do. Keep in mind, this is after I had already invested in another 2 properties.
Yes. Okay.
Okay. So it wasn't like I went to this property seminar, I hadn't done any investing, and I just wanted to run a business. So I'm jumping around timelines a little bit.
This is within a couple of years.
Yeah, this is within like a couple of months.
Months. Okay.
Months.
Right.
So what happened was I bought my first property in 2004. That flunked. It put me off. So I want to make the timeline clear for you, right?
Please.
So that we don't get confused on what's happening here. So in 2004, I bought my first property. Lost $50,000 on that investment. It was a write-off. It really set me back a good number of years. 2010 was when I decided I needed to buy property. I had a bit of saved up money that I had, and I thought I want to buy property. But at the time, I wasn't thinking about investing at all. I was purely just thinking I want to buy something to live in that was close to work, close to the CBD. So I bought a little apartment in Stanmore in Sydney.
Circumstantial something.
Circumstantial, no investment. That wasn't the time where I was thinking about investment. It was purely just I needed to. I'm almost 30 years old. I'm still living with my parents at home. I need to do something. Otherwise, this is going to be embarrassing. Yeah. So I decided to buy this apartment.
A few of us are guilty out there.
Yeah,
Market, Tuan.
No, look.
Edwin.
Today, I don't want to today, I really encourage people to stay at home for as long as possible.
Yes.
Okay, so don't take that out.
Otherwise, you wouldn't be in the position you are.
Exactly. Stay at home, save up, buy your property. Even if you have to it's not embarrassing, right? But
just cop the pain.
Exactly. But so I thought to myself, I need to buy this property. I bought the property. I moved into it. This is the light bulb moment. Wasn't buying the property. It was this. It was in 2013, actually. 2013, the property market moved. It jumped up by about $100,000 to $150,000. My property increased in value by about 150 grand. It went from 360,000, which was how much I paid for it, to 500 grand. And that was when it hit me. I'm like, in 3 years, this property has gone up 150 grand. It's like I would not have had this equity if I didn't make the move and invest in this property. That's when I decided that I needed to utilize the equity in a better way, in a smart way. And that's when I decided to go to these property seminars, expose myself to more kind of how professionals do it. And that's when it unlocked the investing business gene after that. Because what I did was, once I found someone that I trusted, I wanted to work with, I invested in property with them. I bought 2 more properties. Actually, they were in Parramatta, actually. Nice. And after that, I really admired these people. And so what happened was I asked them, so how did you get into property? Because I looked at what they were doing and I thought, that's something I'm really interested in. I have this passion about property.
They were property experts.
They were property investment strategists.
And you were sort of thinking along those lines of,
correct.
Why can't I educate other people?
That's right.
About building wealth through property.
That's right.
Okay.
And I thought to myself, and there was also a sales element involved in that as well. And I thought to myself, that's a skill I want to learn too.
Did you ever have sales skills?
Not direct, no, not direct. But I suppose it had always been inside me in a very natural way.
Yeah.
Because to me, look, people I think when it comes to sales, a lot of people misunderstand what sales actually is. A lot of people, when you think
tell you all the
sales,
features,
it's they think about this sleazy secondhand car salesman or whatever, right? Sales is not that. It's actually just the ability to get someone to see your point of view and convince them on your point of view. That's what sales is, and we do that every day, no matter if we're in sales or not. We do it with our work colleagues, with our friends, our employers, even people that we employ. It's a matter of being able to influence someone. That's it. That's what sales is. And so I thought to myself, that's a skill that would come in handy. It's a life skill that I want to learn as well. And so I decided to directly approach the owner of the property so basically the company I used to, I bought property from, I directly approached the owner and asked her if I could work for her. And she agreed.
Right. There
And
you go.
that's how everything changed.
Awesome. And then I guess that's a huge pivotal point for you, moment in your life.
Yeah.
And then going from there, where did you continue to build out that personal property portfolio?
Oh, 100%. So I continued. That was after 2013. So 2013 was when I actually changed my job, changed my career.
Yeah.
I went from like 8 years of graphic design. I basically let it go, quit my job. It was a matter of 2 weeks.
Was it hard to do?
No, very easy to do. A lot of people ask me that question, whether it was hard. And I think whether it's hard or easy, it depends on your mindset at the time.
Yeah.
At the time, I was 100% sure of that decision, like 110% sure. I knew that this was the right decision, so it wasn't hard. I was very excited for it. So I didn't feel nervous or anything like that. I went from a position of getting a full-time salary, 6 figures, getting paid 6 figures a year, to no salary and purely just based on
That's amazing,
100%
Bruce.
commission.
That is amazing.
100% commission, right? Basically selling property and
Bruce,
I made it work.
As a comparison for the audience,
That's why I
out
joined
there,
BNI. That's how I met you.
Yeah, I know.
Yeah.
As a comparison,
Yeah.
when I met Bruce, I actually got fired from my job, and I was earning half what you were earning. I was making $55,000 wage.
Wow.
And I got fired from this job.
Wow.
I was too slow, and so that forced me to start my business. So
Right.
I had less.
You should be thanking that yourself.
I know.
Seriously.
I am today. Thank God. But it's a different circumstance, and to have that courage is, I think, something else. And I think people should learn from that. There's something to take away from that lesson. Is that circumstances like Bruce's is one that you're really have been exposed heavily to something, and you're so sold over the idea that this is going to work that you made that jump, and it was without flinching. Is that right?
Without flinching, exactly. What really made it work for me early on in my career was the support of my family and friends. They all came on the journey with me. They all ended up like buying a property each.
That's great.
Because I was so caught up in the idea that property, like it's this thing. Like I had like the commitment that I had in the idea of property creating wealth was so strong that everyone around me got kind of like influenced by it. My dad, all my aunties and uncles, my friends and family, they all came on the journey with me. They all bought a property each.
That's so
it
good.
really kind of like gave me a really good kickstart.
Yeah.
Because I didn't have to worry about my income for the next like year, because like just all of that alone paid for the next year of me focusing on my career.
That's fantastic.
And I just dug really deep and I went into that and I made it work. I climbed that career very, very quickly.
Yeah, and like I'm no expert, but you would be in your business. But the commission on in real estate is a significant amount to really snowball the effect if you can compound the success.
Exactly, you can, and
as on the sales side anyway.
Yeah, and
real
like look,
estate.
like that, a lot of people go into property with wanting to get rich, right? Because like people know that the commissions of property are they're big paychecks, right? I'll be lying if I said there wasn't an element of that. But you can't just rely on that. Like you have to believe in what you're doing.
You need to have a
trust
why.
me, because like I work with so many different people in my life, and I was managing people, managing other consultants and salespeople and stuff like that. And someone that is there just for the money, that doesn't have a belief in what they're doing, if you don't truly believe that this is the right thing, you're not going to make it work. You just won't make it work.
It's pretty hard to convince somebody.
You can't make someone else around you believe the same thing as well if you don't believe it yourself. So you can't just go in there with the idea that I'm going to get rich because commissions are big, right?
Yeah.
Yes, they are, but you're not going to be able to sell anything if you don't actually believe it. So like my fundamental is you need to have a good product, you need to have a belief, and once you've got those two things, you pretty much can make anything work.
Yeah.
But without those two things, then it's not going to work.
That's amazing advice right there. I love it. And so the proof of concept for you worked because essentially you were already living and breathing property, and it worked.
I was living and breathing property to the point where I'm sure other people around me got annoyed by it. I was probably sounding like one of those like telemarketing people where all they would talk about is just their business opportunity.
Yeah.
At the time, I was like literally all that would come out of my mouth would be property. And yeah, I was so caught up in it. But yeah, that's what passion is, though.
Yeah, 100%. I can definitely
Yeah.
like feel the passion, not
Yeah.
just hear it from you, and especially over the years, and even till today, like it's great to see you exude that passion. And like for you, did you ever have this along your journey where, because you had that proof of concept, you were doing it. Did you ever had any doubt about whether the property journey would work, and then the business itself would work?
I go through stages of progression. I call it evolving in property. You start off very naive, very kind of like blue ocean, big picture, and that's what gives you the initial burst of motivation, and you're very passionate about it. As you mature, so what I find myself, what's happening is that as I mature along, you get exposed to a lot of the dirty secrets of the industry. Like, I've been in the industry for a long time. I've been exposed to the good, the bad, and the ugly. So once you start understanding the industry and you are in the industry, you see a lot of great things, you see a lot of bad things, and you see a lot of ugly things happen all at the same time. It's like with any industry that you get exposed in. Too much exposure, you get to actually see what actually starts going on in the industry. And so my idea on what looks like a good property portfolio, what are good and bad investments, has evolved over time. It's not the same as it was when I first started. Look, that's fundamentally the reason why in 2020, like I decided to go out on my own and start my own business, because it changed so much to the point where there wasn't much alignment anymore in terms of like what that looked like, what that journey looked like for somebody, for a customer, and also what a good property looked like as well. And that's the reason why I started my own business in 2020. So myself and my business partners, we had control over that entire process for the customer.
And so your knowledge of property had elevated. So hence you made a pivotal change in the way you wanted to sell property.
Correct.
Obviously, now I understand you were working with a firm up until 2020.
To 2020, exactly.
And then you decided to go on your own to then create your own property sort of clientele that would suit you more in terms of managing your ethical responsibility to somebody.
What's our idea on what a successful journey would look like for a customer?
Yeah.
And
did you then lose sort of a bit of faith in what you were doing, what your employer was doing prior to that, in terms of they weren't aligning with some of those for you?
Yeah. Look, yes and no. I was losing a bit of faith in probably some of the property selection part of it, but no faith at all in the idea of growing wealth through property.
Yep.
Right?
Yeah. That's always been strong.
That's never been shaken. The core belief is like 110% the whole way through. But the type of property that somebody buys has evolved over time. And so now, like when we in our business at the moment, like there are certain types of property that we would just never recommend to our members.
Yeah.
And there are certain things that we would never compromise on.
Now we're peeling the layers, and a type of property can really change the dynamic of people's investment journey.
Oh yeah,
isn't it?
100%. I've seen it happen with my own eyes. It's happened to me because I've bought like duds in my there are duds in my portfolio as well that hasn't seen like a lot of capital growth. And I've got massive winners in my, and now knowing what I know today, like I can really see the difference in the two. Why? But and the danger for someone new that's coming into investment is that if you don't know about property, if you don't know what you're looking at, it's very hard to see the differences. Because obviously, like at the end of the day, like anybody can be sold anything. With a sick salesperson in front of them, right? And so that's the danger of property, is buying the wrong property. Yeah, it is a big danger because it can set you back many years if you end up buying the wrong property.
Yeah, and there's not a whole lot of years, right?
There's not a whole lot of years, exactly.
Yeah. Good point. And I think going back as well, one of the in your business, and now that you're in, maybe just share a little bit about your business. And one thing I also wanted to bring back the point of is when you were, I guess, hurt really badly with the with that drug situation at one of your first rental properties.
Yeah.
Like, how do you overcome that in your business and making sure that doesn't happen to
Bruce Guans of the future, like that
Fair
want to
enough.
be first-time investors and don't have to freak out about this. It's our now responsibility, isn't it? If we're advising people on property, as you do,
Yeah.
we want to mitigate that from happening for
course.
others that
Of
are
course.
in our path.
Of course.
Yeah.
I'll start off with pretty much like, so in 2020, when we first started our business, we started with a core philosophy, right? As I said before, we seen the good, the bad, and the ugly. The main reason why we started this business was because we wanted our customers to experience property in a different way. One common thing we notice about most property investment companies, especially in the new property space, the way they would convince someone on how they will do their research is population, infrastructure, and employment. Like if you go to any new property company out there and you to ask them how they do the research, they're going to talk to you about this pie idea, how you're going to get population growth, you're going to get infrastructure
Hospitals.
development, hospitals, and you train site, therefore this area is going to grow. What they don't tell you, the new property that you're buying is probably about 100 grand more expensive than a neighbor that sold in the past 3 months. And that neighbor sold probably 50 to 100 grand less. So the issue with that is that when you go and do the bank valuation and the valuer looks at my neighbor sold for $50,000 less than what I'm paying for, they're going to value it for that much, which means that when you settle the property, the valuer is probably going to value your property at the same price at what your
he
neighbor
sold.
sold for. Guess what that means? It means you lost 50 grand instantly because you have to make up for the shortfall now.
And it's probably, I've been to
Yeah.
seminars myself,
Yeah.
Particularly at the one
Yeah.
you used to work for. And I remember one thing that I felt, I don't know, I'm only an investor, I'm not a professional at property by any means, but one thing I felt is that they never explained to you the supply and demand in that area.
Correct. So things that get
And I got
overlooked.
burned from that.
so things that get overlooked is supply and demand, stock on market statistics. So how many properties are actually on the market in that suburb, and speed to market, which means once a property gets advertised, how long it takes for a property to sell. That will tell you whether or not areas are high demand or not. We take our research incredibly seriously, right? So we look at it from an investor's point of view. We look at it from a price justification point of view. So we want to make sure that whatever price we're recommending in any particular area for a new property, you're paying the equivalent or less than a equivalent second hand. That's the bottom line. If you're getting that means you're getting value no matter what.
Yeah.
It doesn't really matter if that area is going to grow or not in the next 10 years. You're getting value straight away. That's the thing. And then we look at stock on market and we make sure that the supply and demand is good for the area. So that's pretty much like how the due diligence that we do that I think separates us pretty much from everybody else that sells new property.
Because I feel that
yeah.
when people do have, the investment advisory firms that we that are out there are certain firms that sort of are limited by what they have to sell,
Yeah.
or they have certain listings or a list of
Yeah.
stock that they can choose from,
Yeah.
and that always brings about, in any business, right? When you have these decisions in front of you, which property can I offer somebody? It should come down to, especially if you're a buyer's agent or you're on the side of helping someone buy, it should be in the best interest of a customer or a client or someone who wants to invest in property for themselves, for their own benefit, whether it's the right property for them. Is it got the right yield? Is it the right property at the right time that's not going to get undervalued at time of settlement?
Correct.
And so these ethics come into play. And I guess that's what sets apart different businesses that are very successful, because they are always of the best interest of the customer, I find. And because that sometimes I feel, if you can agree with me, there are companies out that can be a little bit contrived in the way they advise on the properties.
Correct. And that's one of the core reasons why, we decided to go out and do something on our own to make sure that was put at the forefront of all the decisions throughout the business.
Yeah.
It wasn't just a marketing thing, right?
So, but I guess for all the audio, people that are listening and viewing, it's very important to choose wisely. And yes, going to properties is great. Like the mindset has to be there.
Yeah.
The passion, why. But then once you're in it, peeling those layers back again. Like we need to think about, okay, who is going to be the right person to guide me through the journey? And that can also be detrimental, isn't it?
That can be detrimental as well, 100%. So, I think that it's really good for someone to get into property. I think that it's the idea of property building wealth is something that's very, very rock solid in this country. It is it's probably like for most people, it's probably pretty much the only way to really kind of like retire properly, right? Like with a sustainable property portfolio by the time you retire. There are many ways that you can go with property, right? And I think they all have equal chance of success, to be honest with you. Like a lot of people will say like, this is the one way you got to do it, which is buy and renovate or, buy property and flip. I don't really believe in that. I believe that every single strategy out there has an equal chance of success in the long term after 10, 20, 30 years. The only question is what's actually most suitable for you in your individual position, right? And what property are you buying in that category that's actually going to work for you? That's pretty much the only two questions you got to ask. Yeah. Because there are good properties and bad properties in every single category. Not just brand new. A lot of people have this like bias against brand new property. I get it. Like trust me, man. It's an uphill battle I fight every single day, man. Like every day, I've got people coming to me. It's like, are you still brand new property? All you thinking about is just your commissions immediately, without like understanding my business at all. Every day, I have to fight that objection with every single member that comes through. I'm on the front lines fighting that every single day because I know that we are the only company doing it differently. I know that 100%. Yep. But if you look at the secondhand property space, there are so many secondhand duds out there too. It's not like secondhand property is like instant success. Like you can buy secondhand property and lose money just as you can buy a brand new one and lose money too. You can renovate and flip and lose money as well. It doesn't mean that you're going to find success. I believe having a proper brand new strategy portfolio gives you just as much, if not more, chances at success as doing it any other way. But you just have to make sure you buy the right properties that are actually gonna work for you.
I agree.
Yeah.
And you bring up a good point about new properties, and I'm going to be first to say that more than half my portfolio is all brand new properties. And the reason why I do it is because I felt that in these growing dense populations, and as the properties were building out, and I've, for example, bought properties in Austral, and I felt it was the right move at the right time. Yeah. And I grew up in that neighborhood, and to see that Elizabeth Hills were having properties $1 to $1.5 million, and they're selling properties at Austral next door for $500,000 for a 300 square meter block.
You would have killed it if you bought a property at Austral for $500,000.
Yeah,
you killed it.
And my mindset was here's 3 lots that this developer had next to each other. Sorry, I didn't go through Bruce on this one, but
next time.
But definitely, and I felt value. I was like, no brainer. So
no brainer, exactly.
The 3 like side by side. Is why not? It's such and to the results now in 2023 speak for themselves. And I think people need to look beyond the reasons of there's a stigma. Yes, this is, and I know because I'm as an advisor in depreciation and working with lots of people, and I've heard that there are people that advise based on commissions, and that's a bad stigma.
Very bad stigma,
for the industry, I'm sure. And so people should be aware out there that it does exist. It's not even a myth or a theory. It actually, there are good businesses as there are bad businesses in any industry. And rightly so, there are bad products and good products, and it's about finding someone that can advise you to source the good from the bad and the ugly.
So let me just comment on that whole commission thing, right? Because I think there's a big misconception about how commissions work in the industry. Yeah. Every time I get asked this question about commissions, and it's a very common question, like I get asked it all the time, right? Are you actually working in my best interest because you get paid a commission, right? What I typically do is I explain how commissions work in Australia, right? And so for anyone that's listening, like this is actually how it works. Like for every single property transaction, there's always going to be a commission that's being paid from somebody to somebody, right? So whether it's a real estate agent, a developer, even with us, the only scenario where someone's truly working for you is when you use a buyer's agent, right? In that scenario, like in every single other scenario, whether if you're taking advice from a real estate agent or if you're working buy directly from a developer, even when you buy directly from there's still a commission being paid because a commission is being paid to your own salesperson. There's someone managing that transaction. So even when you buy directly from a developer, there's still a commission being paid just within their own organization. When you're buying from a real estate agent, the real estate agents obviously getting paid a commission. Companies like ours, we get paid commissions as well. We just do it in a way where it doesn't jeopardize the value of the deal. That's all. That's the only difference.
That's the biggest concern, is that the commissions are so great that it starts to affect the purchasing price.
Correct.
And also the resale value.
And that's the reason why we put so much emphasis on comparable sales.
Yeah.
Because, like, look, honestly, if you're going to buy a property and it's literally the same property and the brand new equivalent is 500,000 and the secondhand comparable down the street, same, let's assume it's the same size, same land size, whatever, sold for 470. You're buying a brand new one for 470 and the secondhand one sold for 500 grand, right?
Yep.
So the brand new one is actually $30,000 cheaper.
Yep.
Then it kind of makes sense, right?
Yep.
The only time where I think where it's an issue is if you're buying that brand new property for like 550 and your secondhand one sold for 480 or 470 and you're paying 70 grand more, 100 grand more
For the brand new.
for the brand new one.
That's the issue.
That's the issue, because that's when you're going to get valuation shortfalls.
You're right.
And you're going to lose money on that deal.
Yeah.
Right? So in that sense, if I can deliver a deal like that to you, then
It's a no-brainer.
it's a no-brainer. I don't think you'll care how much I get paid in that sense.
In the situation, I
Yeah.
think the Austral property at that time, because of the finite resource of buying properties in Austral, because that area was sort of building out and it was a newly developed area that
Correct.
was rezoned. And so at that point in time, buying that was a great decision, because the properties elsewhere around that areas that were built were going for 10, 15% over.
Correct.
Because you just couldn't find stock. And this is the type of investment that would work. And on that point is that because I knew the area really well, you don't need a buyer's agent. And that has been one of the biggest luxuries of, I guess, a lot of investors, probably in the last 10, 15 years, and maybe well before that. But now it's getting to a point where it's no longer sustainable to make those decisions, because where we live is probably an average of $1 million suburb, right? In terms of average housing prices. And so it's no longer sustainable to go buy the place next door for $800,000 or $900,000 or whatever it is.
That's right.
So, then it's natural to gravitate towards someone that knows what to do.
That's right.
And because, you don't always have to buy in your area. I understand that.
Exactly.
So people have to become more comfortable with talking to a buyer's agent or an expert of some sort. Even if you have to talk to a real estate agent who knows the area really well and you can trust and has good rapport.
That's right.
That's someone you want to be able to trust.
Exactly.
And so I don't think people should discount brand new and old, because from my personal experience, it can be very rewarding if you talk to the right person.
Exactly. You just got to make sure you get the right type of deal. That's it.
Not to mention the depreciation benefits and a high tax bracket.
That's right. That's right. Exactly. Exactly.
So, if you are paying a lot of tax, there is that kicker of depreciation. So just reminding the audience there,
That's right. And you know who to go for that, right?
That's right. I think it's good for investors to understand what's happening in the market from the commercial side in terms of the business side and how people transact property. Because people should really get feedback from actual real experiences there, and because I spend so much time on Facebook groups and nurturing investors to making decisions about depreciation, but I also see what's happening in between that. Where should I buy? Who should I go with? Who should I see for an accountant? All of these things matter, but the amount of resources out there to get feedback about certain businesses is insurmountable. There's so much information.
Exactly.
Yeah.
I mean, I'm really like every time I talk to somebody, I almost can sense whether someone wants to ask me a question but doesn't want to ask it, right? If they think that I'm sensitive to it, for example, the commission question.
Yeah.
The reality is that I'm not. I will answer these questions every single day of the week. Why? And this is the only reason why. Because I'm confident with our process. If you talk to someone about commissions and they skirt around the answer, that's the red flag. Why? Because if they're skirting around the answer, it means that they're not confident with their process. They're not confident in answering the question in a direct way that's going to actually implicate their own business.
Why they earn that commission, right?
Because they can't justify it.
Yeah.
Right? But if you ask me every single day, I'll be telling straight up, we earn commissions, right? We do earn commissions, but I'm going to be able to get you value at the same time.
So
I'm going to be able to get you a property that you can pay that will be, the same as or below a secondhand equivalent. That's my guarantee to you. And so if you ask anyone else that question in your property space and they can't enter in that way, that's the issue.
And as long as the value exceeds
Yeah.
the cost of the commission, the price of the commission, then I think everybody should be happy.
Correct.
And
Correct. Exactly right.
And it's so important. I think in
Yeah.
this day and age, if you can't afford property in your local area, and
Yeah.
if you live in Sydney, then
Yeah.
then it's a no-brainer to go see someone and pay the fees. And buyer's agent fee is no different to a commission. To get the right advice. And I think, nowadays, because of the affordability issue and you want to invest, well, it's something that you should go out of your way to, seek advice on that. And it costs something to get that type of education.
That's right.
But do your research
Exactly.
end of the day. Bruce, if we don't mind sharing with the audience.
Sure.
What's your one secret?
One secret?
Not one secret. What's your one tip that you
One
can
tip.
give to an investment, somebody that's seeking to get into the property space?
One single tip. Wow,
One single
that's
tip.
limiting.
It's
to
limiting.
Just one thing, isn't it? Holy crap. All right. If you're going to ask me just one single thing, then it's going to be a cliche. I'm sorry. But it's true, though. Cliches are there for a reason. Okay. So how you think is more important about what you do. Okay, so I know it's back to the whole bullcrap mindset thing, but it's not bullcrap. It's true.
Yeah.
Every single business person out there will tell you. Every single successful person out there will tell you that it's all about the mindset. It's pretty much it. That's half the game. After that, then it comes the property selection, the how, the strategy, everything else. But if you haven't got your mindset right and you haven't got the reasons why you're doing it right in the first place, you're gonna fail before you start. That's the most important thing.
Awesome.
If you say if you really want to limit to just one thing, that's the one thing I'm going to give you.
Cool.
Yeah.
I think that's a really good point. Having your mindset in the right place
Yeah,
is the
it's not just for
beginning.
property; it's for anything you want to do, business, property, whatever it is. Yeah.
Amazing.
Yeah.
Amazing. There you go. There you have it.
Yeah.
And on that note, we're going to go into what we do with every segment. We're going to do
Okay.
the Property Blueprint Podcast Brainbuster. We have something to ask you.
Yep.
And that question is, if you had $10 million
Okay.
on the lottery,
Yep.
how would you spend it
How would I spend it?
on your investment portfolio? I know you'd have a few lavish things there, Bruce. Well, okay. Well, share your lavish.
No.
Tell people what you love.
No. Like that. Okay. Let me just break this down for a second, right? Because if you did win $10 million, my question is, you're pretty much set for the rest of your life. Like, why do you want to invest?
Yeah, that's true.
Just kind of like leave in the bank, get the interest. Who cares, right? Like,
yeah, that's true.
that would be
That's
my
true.
first reaction. Is like, if I have $10 million, a lot of people are trying to get to their
Offset
retirement
their house.
just to get $2 million. You've already got $10 million. You don't even need to invest.
Yes, true,
that would be my first reaction.
Maybe $1 million. Should we say $1 million?
So no.
What's a
So
more-
I'm still going to answer the question, regardless of the number. So I'm going to break it down with percentages instead. Okay. So regardless.
Some people have very expensive hobbies once they get to a 10 million. They think, I need to make more so
Yeah,
I can
so-
afford at least
so-
half that yacht.
So if you ask me how I would do it, okay.
Yeah.
So I don't know about anybody else. How I would do it is I would probably dedicate half to my foundational assets. Property is a foundational asset. So property. So the way I break up investments is foundational, and then you've got the middle one, which is pretty much like higher risk type, higher return, and then like really speculative, like crazy type of things. At least half of that windfall would go to a foundational asset. And property in my portfolio is a foundational asset. So those foundational assets are what I deem to be untouchable. They're there for my future. No matter what happens to my business, no matter what happens to anything else in my life, my foundational assets will carry me through because that's my insurance policy. That's it. I use it as my own personal insurance policy.
Yeah.
So half will go to property. Then I would go, whatever your risk appetite is, I'll allocate more to other things if I want to. For example, business or whatever, other things like that, right? Shares or whatever that might be.
Slightly higher risk.
It's higher risk, higher return. And if I lose it all, it doesn't matter. Because I've got my foundational assets is already set in place. It's a simple way to answer it, but that's how I would answer it. Half will go to
Fantastic.
property.
Fantastic.
Yeah.
How critical is it to have a strong property portfolio if you really want to secure your future? and it's straight from these experts' mouth here is Bruce. So thank you, Bruce, so much for being on today. Really appreciate you sharing so much of your wisdom with the audience, and I'm sure there's a lot of investors out there or people that want to invest for the first time. I hope that they get so much from today's episode.
Yeah, great. Thank you very much for having me on.
Thank you, Bruce.
It was a pleasure.
Awesome.
Okay.
Thanks, guys, for joining us on today's episode. If you like what you saw, please like, share, and subscribe. I'll see you guys next time.